Hey, what's going on, my friends? It's your man Adam Ace Spencer here with another video diving a bit into our dividend portfolio, specifically JP Morgan Chase. And I want to share this article with you guys, this news, because I do love working with JP Morgan Chase as a customer. I have my other channel, Grants Loans Credit. Actually, I just recently made a video on the My Chase loan program. Definitely, I'll add a link down below. Just check out that other channel in general if you guys are interested in grants, loans, or credit cards. Because yeah, I'm a fan. But you guys know, we also have JP Morgan Chase inside of our dividend portfolio. And it often makes sense, oftentimes it makes sense to consider investing in companies you work with, companies that you are a customer of, right? And when I came across this news that JP Morgan plots astonishing 12 billion tech spend to beat fintechs, it got me a little excited. Now I know some people might get a little worried. As you can see, big increase in investment will hurt profitability. Some people gonna be, some people gonna be worried about that type of stuff, right? Raising fears. I'm not worried. To me, this is a good and necessary investment that JP Morgan is making to help them with competing with new competition, new companies, new fintech companies that are coming out. And so let's dive into this. JP Morgan Chase, the largest lender on Wall Street, said it plans to dramatically increase spending on technology and talent to fortify its competitive position, stirring investor worries about U.S. bank earnings in 2022. Now, really quickly, I haven't read this full article. And if, JP Morgan Chase decides to make a little bit of a dividend cut because of these plans, we, for example, got rid of AT&T. So we have no problem with being able to let someone go. But if we believe the cuts are worthwhile, we'll still be getting payments, but we'll also see not drastic, but we'll also see a nice gains with the stock price. Well, we're completely fine with it. And we're going to keep moving forward. But let's continue with the article. As it reported record profits last year, JP Morgan stunned analysts with a forecast that expenses would increase by 8% this year to around $77 billion, meaning it would probably miss a key profitability target in 2022 and possibly 2023. Part of the elevated expenses are from higher pay, with an extra $2.5 billion earmarked for compensation and travel expenses. But JP Morgan also said it planned to increase new investments this year by $3.5 billion, or 30% to almost $15 billion. Technology spending in 2022 will hit $12 billion in 2022, it said. The global technology spend at around $12 billion. That's an astonishing number, said James Shanahan, an analyst with Edward Jones. That probably blows away the cumulative dollar value of investment of all the fintechs in the world that are trying to disrupt them. JP Morgan shares, which have nearly doubled from the depths of the pandemic, fell more than 6% on Friday. This also dented the stock prices of other major banks set to report earnings next week, with Morgan Stanley down 3.6%, Goldman Sachs 2.5%, and Bank of America 1.7%. Jamie Dimon, 65, who has carved out a reputation for cost control as JP Morgan's chief executive since 2005, told analysts the bank would need to spend a few bucks to beat competitors. However, the spending plans prompted Mike Mayo, a bank's analyst at Wells Fargo who has recommended JP Morgan to clients for the past 7 years, to downgrade the bank's stock, absent any performance metrics attached to the increased spending. Even Jamie Dimon, one of the best bankers of his generation, doesn't get a free pass to increase investment spending by half over 3 years without giving more granularity about expected benefits, Mayo said. JP Morgan predicts investment spending will rise to almost $15 billion in 2022, and this chart just shows you the way things are going. They are investing. JPMorgan is ramping up spending just as a surge in deal-making activity that produced record investment banking revenue is starting to lose steam. Investors had hoped that rising interest rates and higher rates on loans would help compensate, but instead much of this benefit will now go to fund new investments. The big spending reflects the pressure on banks to compete with financial technology companies like payments processor Stripe, installment lender Affirm, and challenger bank Chime. Jamie Burnham, JP Morgan's chief financial officer, said the bank was in a moment of acceleration of investment spending. Part of the reason for that is the amount of competition out there in the market, Burnham said in a call with reporters, especially from novel entrants. JP Morgan is earmarking new funds for data centers and cloud computing as expansion into new markets like the UK and marketing costs. Executives say investments in technology today will ultimately result in lower operating costs, but it could take years to really realize those savings, and the lack of granular detail is a source of frustration for investors. You, as a shareholder, as an outsider, are never going to be able to tell the difference between investment spending and just plain old spending until 3 years later. So you just have to take it on faith, said Chris Kotosowski, banks analyst at Oppenheimer & Co. After fourth quarter earnings at Citigroup, which has already been spending heavily to bolster its technology under regulatory pressure following mishaps at the bank, Chief Financial Officer Mark Mason called technology a very important growth line in the bank's expense base without giving specific forecasts. The bank's stock closed down 1.25% on Friday. Meanwhile, Wells Fargo shares rose 2% after the bank reported revenue climbed 12% in the fourth quarter as it sought to recover from a false account scandal. The bank, blah, 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 blah. We don't need any of that. So when it's all said and done, my friends, we are not worried about companies like JP Morgan who are willing to invest in their technology and their business to stay up to date with the times, with the needs for what's to come. Yes, we want to see them, with money, and we want to see our dividends, but as long as if they can do it in a manner that's going to allow them to invest in the company without necessarily, especially without affecting the dividend payouts, that is huge. And that's what you absolutely want to see. It's very promising. And of course, there are times where they may have to make a cut. And depending on the one thing this article mentions is we don't have all of the nitty gritty details into the insight as to exactly where the money's going. Seeing that, okay, a lot of this money will be going towards, employees and like travel and stuff like that. It's like, you're seeing a lot of businesses making shifts where people are working from home more remotely. And if anything, more, I feel like those expenses should be getting cut, not increased. But hey, maybe they're expanding, maybe they're bringing on more, executive leadership that's going to help the company actually do better. Again, we don't have all of that insight, so that's where it makes it a little iffy. But it's JPMorgan Chase. You have to trust them. You have to believe that what they're doing is going to be for the better, greater interest of the company, as well as you as an investor and as a customer, and which, as I mentioned, I am. So I just wanted to share this article with you guys, this news. To me, this is good. This is promising because it's helping us to know that they want to continue to be dominant and be, just be able to compete with anyone that's new in the fintech, industry sector. So I'm going to wrap it up there. But if you guys are interested in more dividend videos, definitely check out my dividend portfolio videos where we do an updated look at our dividend portfolio. Every week we contribute $25, and that portfolio does include JPMorgan Chase. But all right, my friends, feel free to leave a comment down below with your thoughts. Do you have JPMorgan Chase in your portfolio? Are you thinking about adding them? If so, why? If not, why not? And I also have some links down below where you can get some free stocks or free cash, depending on which link you click. Webull, M1 Finance, you can get some free cash if you open and fund your account. So yeah, definitely check out those links while you're down there. But all right, my friends, enough from me. I gotta keep it moving, but much appreciation for watching. You already know I'll see you in the next video. Peace.